Bitcoin is not a hedge against the artificial intelligence buildout, Warband. One of the sharpest macro voices working said yesterday that it is the buildout's purest expression. Cold steel, clear eyes. Here is what moved while you slept. It is Monday, the 24th of August, 2026. Start with the anchor. As of just after 5 o'clock this morning, Eastern, Bitcoin trades at 77,100. Up about 0.7% on the day. Its optimized trend holds green, and it stands beside gold as one of the two leaders on our board. Broad market green, Nasdaq red, long bond red. The regime engine still reads hard assets, pointed up. Late Friday, Bitcoin ran at $80,000 and could not hold it. It brushed roughly 79,400. The exchange-traded fund bid went home for the weekend, and thin Saturday liquidity carried it back to where it sits now. And I owe you a mark. Yesterday, I handed you a conference cell printed by Ethereum, Bitcoin, and Solana inside 12 hours, and I told you I would grade it honestly in either direction. Here is the grade. Bitcoin is higher this morning than it was when I marked it. Still a shade under the level where the signal fired, so the sell is not wrong yet, but it is not winning either. That is the honest read at 2 days. Nothing proven in either direction. A signal earns its reputation over dozens of prints, and this one has spent 2. Now to the thing worth your Monday. Yesterday, Jordi Visser of 22V Research sat with Anthony Pompliano and made an argument I have not heard him make before. It inverts the frame this warband has been carrying all week. For 5 straight mornings, I have handed you the artificial intelligence built out as a story about physical limits. Barrels through a closed strait, megawatts pulled out of a permit file, memory that now costs more than the processor sitting beside it, scarce things getting scarcer, priced in public. Visser came at it from the opposite end. His claim is that artificial intelligence compresses economic time. Work that took a business 3 years now takes 3 months. And when the clock speeds up, the first thing that breaks is not the technology. It is the multiple. Every valuation any of you own is a wager on how long a company holds its advantage. Shorten that runway across the entire economy, and you have not made businesses more valuable. You have made their moats rot faster. He calls Bitcoin the anti-decay asset, not because it does something clever, because it does nothing at all. 21 million. No moat to erode. No competitor to out-execute. No product cycle to miss. Fixed supply is the one property on your screen that artificial intelligence cannot compress, accelerate, disrupt, or out-innovate. His words, and I hand them to you as his. Bitcoin could be the S&P 500 of 10 years from now, and it is the purest artificial intelligence trade. Now the second order implication, because that is where this stops being a slogan. If he is right, the correlation every desk trades runs backwards. For 3 years, those desks have traded Bitcoin as high beta Nasdaq. Risk on. Sell it when chips sell off. That trade works right up until the market works out that the same force lifting artificial intelligence earnings is quietly shortening the life of every earnings stream on the index. On that day, Bitcoin stops trading as a leveraged technology bet and starts trading as the escape from one. Then hold it against our own board. On Friday, our engine marked the Nasdaq's trend down, and Nvidia's with it, while gold and Bitcoin stayed green and led. Nobody at this shop heard that podcast. The tape had already started doing the thing he described. Now, to the company most of you are long, and to a number that came off a factory floor rather than a podium. On Thursday, a JP Morgan analyst published a note following a tour of Tesla's Fremont plant. That is analyst work, not company disclosure, and I waited accordingly. But it answers a question I have been circling for 2 months. Trackers have watched Tesla's robotaxi fleet count sit roughly flat all summer while the company collected permit after permit. Nevada cleared it for 5,000 vehicles. Austin has a dedicated hub, and the fleet did not grow to match. The bear read on, that is simple. Tesla cannot scale. The note says something else entirely. Tesla is deliberately holding back further Model Y additions to the fleet in order to prioritize Cybercab. Read that as a choice, not a ceiling. You do not throttle the car you already build at volume unless you mean to replace it with the one that has no steering wheel and no pedals. And Tesla has now put a date on that, an invitation-only Cybercab launch event in Austin on the 3rd of September, employees riding first. 2 more marks of the same tour. The near-term unlock for fleet expansion is full self-driving version 15, described as a step change, with roughly 40% of its 7 core technologies already running inside the live robotaxi fleet. That is not a promise about a future build. That is a build being tested on public roads, under a fleet carrying paying passengers, and the humanoid. The 3rd generation Optimus line is going into Fremont, into the retired Model S and X bay on a roughly 4-month conversion. Sit with that image. The bay that built the cars which carried this company out of bankruptcy is being torn out to build robots. The analyst puts commercial sales of that machine in the back half of 2027. That is his estimate and not the company's. But the tooling is not an estimate. Tooling is steel, and it is going in now. One more, and it sets your week. The Federal Reserve's new chair delivers his first Jackson Hole keynote on Friday. Before he speaks, look hard at what the market actually expects in September, because most people have the frame upside down. The live debate is not whether they cut, it is whether they hike. Prediction markets put a hold near 70% and a quarter-point hike near 28%. In the middle of July, that hike probability set above 80%. Now put Visser's other line from yesterday beside it. He warned that betting against government intervention to cap yields is, his phrasing, a very, very, very dangerous game. Last Wednesday, you watched that intervention arrive. The Treasury announced it would at least double its long-end buybacks. Yields fell 9 basis points on the news. By Friday afternoon, the market had taken back every one of them, and our engine marked the long bond red again. So the borrower reached out to set the price of its own paper, and the lender refused the price. Still beats parchment. So carry this into the week, Warband. There will be plenty of noise. An inflation print, an earnings report, a new chair with a microphone, and a room full of central bankers. 3 separate chances for somebody to move your screen by Friday. But hold the argument that landed yesterday, because it will outlive all 3. Visser did not say Bitcoin wins because governments fail. He said Bitcoin wins because everything else gets faster, and speed is corrosive to anything that has to keep earning its position, quarter after quarter, against competitors who now think in months instead of years. Your stack does not have to keep earning its position. It only has to exist. 21 million of them, and not one more, no matter how fast the machines learn. That is the whole trade. It always was. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Until tomorrow, hold the long horizon. Skål.